9 out of 10 small businesses that fail do so because of financial mismanagement. Not bad products, not poor marketing, they simply don't understand their numbers. And if you're watching this video, you're probably making the same deadly mistakes right now. Hey there, I'm Tiffany Phillips, and if you're new here, make sure to hit that subscribe button because we talk about real tax strategies and business finance advice that actually helps you keep more money. Look, I know what you're thinking. Tiffany, I didn't start my business to become an accountant. And you're absolutely right. But here's what nobody tells you. You can have the most amazing product and incredible marketing, but if you don't understand your numbers, you're driving your business blindfolded at 70 miles per hour. Warren Buffett says accounting is the language of business. And just like you wouldn't try to do business in France without speaking French, you can't build a successful business without understanding the basic language of money. In this video, I'm breaking down the accounting basics that every business owner needs to know. Not the boring stuff your CPA drones on about, but the real-world practical knowledge that will help you make better decisions and actually understand whether you're making money or just staying busy. If this sounds like something you need to hear, smash that like button and let's dive in. Let me tell you about Sarah. She came to me with what looked like a thriving business, $200,000 in revenue, staying busy, waiting a list of clients. By all appearances, she was crushing it. But when I asked her one simple question, how much profit did you make last month? She couldn't answer. She had no idea if she was actually making money or just breaking even. Turns out she was barely profitable. All that revenue, most of it was going right back out in expenses she wasn't tracking. She was working 80-hour weeks to essentially break even. This is the reality for most small business owners. You're so focused on delivering your service that you're completely ignoring the financial health of your business. Here's what I see all the time. Business owners who can tell you exactly how many Instagram followers they have, but they can't tell you their profit margin. They know their latest marketing conversion rates, but they don't know their cash flow. When you don't understand your numbers, you make decisions based on your feelings instead of facts. You think you're doing well because you're busy, but busy doesn't equal profitable. I've seen business owners take on debt they couldn't afford because they didn't understand cash flow, miss huge tax deductions because they weren't tracking expenses properly, price their products too low because they didn't understand their true cost. But here's what really fires me up. Most CPAs aren't helping you understand this. They hand you a tax return once a year and expect you to figure out the rest. That's not good enough. You deserve to understand your own numbers. The good news, the basics aren't that complicated. Drop a comment below if you've ever felt confused about your own business numbers. You're not alone. Every business has 3 financial statements that tell a story of what's really happening with your money. Think of them as the vital signs of your business. First, your income statement, or the P&L. This shows how much money you made and spent over a specific time period. At the top, you have revenue, all money coming in. Subtract all expenses, everything you spent to generate that revenue. What's left is profit. But here's where most business owners mess up. They look at revenue and think they're doing great. Revenue is not profit. Revenue might stroke your ego, but profit pays your bills. I had a client bragging about 6-figure revenue, but her profit, she was making less than minimum wage for all her hours. Second, your balance sheet. This is a snapshot of your business at a specific point. It shows what you own, what you owe, and what's left over. Assets minus liabilities equal equity. Basically, what your business is worth. If your liabilities are growing faster than your assets, that's a red flag. Third, your cash flow statement. This tracks actual cash movement in and out of your business. This might be the most important for small business owners. Here's why. You can be profitable on paper, but still run out of cash. You might have made a sale that shows as revenue, but if the customer hasn't paid yet, you don't have the cash. I've seen profitable businesses fail because they ran out of cash. Cash flow is the lifeblood of your business. These 3 statements work together. The income statement tells you if you're making money, the balance sheet tells you if you're financially stable, and the cash flow statement tells you if you can pay your bills. Most business owners only look at revenue and wonder why they're struggling. It's like driving by only watching the speedometer while ignoring the fuel gauge. Let's talk about something that confuses most business owners: cash versus accrual accounting. This sounds boring, but this decision can save or cost you thousands. Cash accounting is when you record income when you've received the money and expenses when you pay them, like your personal checkbook. Accrual accounting is recording income when you earn it and expenses when you incur them, regardless of when money changes hands. Which should you use? Well, it depends on your business and your goals. Most small businesses start with cash accounting because it's simpler. And for many service businesses, it works fine. But here's the tax advantage. Cash accounting gives you more control over when you pay taxes. December of a good year, delay invoices until January, pushing income to next year's return. Or prepay expenses in December to reduce this year's taxes. With Accrual, you can't do that. But Accrual gives you a more accurate picture of business performance. I had a client using cash accounting who thought she had a terrible month because clients were slow to pay. But she'd actually done tons of work. She just hadn't been paid yet. For most small businesses, I recommend starting with cash accounting for simplicity, but understanding Accrual concepts for better decision making. Hit that like button if you're learning something new here. Now, here's something that might shock you. Most financial reports your bookkeeper gives you are useless for running your business day to day. What you need are numbers that actually drive your business forward. Number one, profit margin. Not just total profit, but what percentage of each dollar you keep. $100,000 in revenue, keeping only $5,000, that's 5% margins and it's not sustainable. Number two, cash conversion cycle. How long from investment to cash back in your pocket? Shorter cycle equals better cash flow. Number three, customer acquisition cost versus lifetime value. If it costs $500 to get a customer who only spends $300, you're going out of business. But if they spend $3,000 over their lifetime, it's a great investment. Number four, break-even point. The minimum revenue needed to cover expenses. Use this for decisions. New expense means how much additional revenue is needed. Number five, cash flow forecast. Not just what happened, but what's coming. Cash problems build over time. I had a client growing fast but ignoring cash flow forecasting. Kept taking bigger projects requiring upfront investment. Looked great on paper, but she ran out of cash before big clients paid. She almost lost her business focusing on the wrong numbers. These numbers matter for running your business. Your CPA might not track them, but you need to understand them. Understanding numbers is half the battle. Real power comes from using them for better decisions. Hiring example. Most think, I'm swamped, I need help. Smart owners think, what's my profit margin? Employee costs $60,000. I need to make $300,000 additional revenue at 20% margins just to break even. Do I have a plan for that revenue? Here's a pricing example. Scared to raise prices? Numbers tell you exactly how many customers you can afford to lose. Raise prices 20%, improve margins, and you can lose customers and still make more money. I had a client terrified to raise prices. The math showed she could lose 30% of customers and still make more profit. She lost only 10% and increased profit by 40%. How about big project decisions? Don't just look at total revenue. What's the profit margin? How about the cash flow impact? Need additional help or equipment? What's the opportunity cost? Make your data actionable. Don't file reports away. Use them to guide every major decision. What's the biggest business decision you're facing right now? Let me know in the comments. Remember that statistic from the beginning? 9 out of 10 small businesses fail because of financial mismanagement. But now you understand why. Nobody teaches the basics of understanding your numbers. You now understand the 3 financial statements: cash versus accrual accounting, which numbers actually matter, and how to use them for better decisions. This isn't just about better reports. It's about taking control of your business and your financial future. When you understand your numbers, you make decisions based on facts instead of feelings. You spot problems before they become crises, and you identify opportunities others miss. But this is just the foundation. The same principles that can help you understand your business performance can help you legally reduce taxes and keep more of what you earn. If you want to learn how to use your financial knowledge to legally pay less in taxes, grab my book, Your Biggest Expense, at yourbiggestexpense.com. You'll discover 10 strategies that could reduce your taxes by 30% or more. Don't forget to subscribe for more videos like this. Hit the like button if this helped you, and check out these other videos I think you'll love. I'll see you in the next one.